Hey guys, this Crypto Marisha does it all, a little bit of everything. The question in everybody's mind, and everyone is saying that the government is going to bail out SVB, and you all already aware of what's going on. Janet Yellen say no, the government not going to do it, and then later on we heard yes. All the people that have money in there are not going to lose their money. They will fully be paid. It's all over the place. So let me read it to see what's going on, okay? Is Silicon Valley Bank getting a government bailout? Not in the 2008 sense. And federal officials have announced that they are guaranteeing all deposits at Silicon Valley Bank, the tech-focused lender that U.S. authorities shut down Friday in one of the biggest bank collapses in years. In a joint statement Sunday, the U.S. Treasury, the Federal Reserve, and the Federal Deposits Insurance Corp said the extraordinary measures they were taking to shore up SVB deposits would not come at taxpayers' expense, as whether the actions constituted a bailout. A senior Treasury Department official emphasized that point Sunday night. So if the taxpayers are not bailing them out, can somebody please tell me then who is going to do it? Give me a break, y'all. We are not dumb. We are not stupid. Taxpayers don't get help they need when they're in need of it. But whenever those big guys fall out because of their recklessness, because of their greed, we have to come and bail them out. It makes no sense to the people that can think and know how hard you work, you pay your tax, and then we have to bail out these idiots that are spending money like nobody's business. The government also reiterated that only SVB depositors, as well as those at New York-based Signature Bank, a second institution it took over and shut down, would be made whole. Shareholders of the failed banks, as well as some bondholders, will not be protected by the actions, the agency statement noted. Let me be clear that during the financial crisis, there were investors and owners of systemic large banks that were bailed out, and the reforms that have been put in place means that we are not going to do that again. Well, I hope not. Treasury Secretary Janet Yellen said on CBS Face the Nation on Sunday before the emergency measures were announced. Isn't it amazing? Us, the taxpayers, bail them out. But if we need a loan to buy a house or car, they're giving us hell. Does it make sense? Can somebody please explain this to me? We bail those CEOs making millions of dollars on bonuses, not doing a thing, sometimes not even appear in the damn office, don't even know what the office look like. Okay, we bail them out over and over when they greed take over, when they recklessness crash the car, and we have to come and bail them out. It doesn't make any sense to me. And if we need a loan, we need a handout, they don't give it to us. It just doesn't make any sense. But we are concerned about depositors and are focused on trying to meet their needs, she said. The cost of covering the deposit, including uninsured amount in excess of the FDIC's $250,000 limit, will be paid for in part out of the agency's deposit insurance fund, a reserve that is paid for by a quarterly fee on banks. So that means if you have more than $250,000, you're out of gas. Can you imagine that? And remarks Monday morning, President Joe Biden said taxpayers would not be on the hook for losses suffered as a result of the backstop measure. Instead, he said losses would be borne by fees paid by banks. Funding for emergency measures will also come from selling off SVB's assets, said Morgan Wicks, a banking professor at Vanderbilt Law School. As a result, he said taxpayer dollars will not be directly implicated in the backstops measure. That's what they say. This is a key difference from the congressional approved bailout of the U.S. financial system authorities approved in the fall of 2008. That legislation, called the Emergency Economic Stabilization Act, earmarked $700 billion to create the Troubled Asset Relief Program to purchase toxic assets from banks. By designating the backstop measures as a systemic risk exception event, Washington regulators sidestepped a vote that would otherwise be required in Congress on whether to backstop the bank's depositors. The exception designation required the approval of 2/3 of the Federal Reserve Board of Governors, 2/3 of the Board of FDIC, and the Treasury Department in consultation with the President, Wicks said. The agency's joint statement Sunday said any loss the deposit insurance fund ultimately incurs to support depositors will be recovered by ongoing fees on banks. Assuming there are losses, Wicks said the cost of the guarantee of all depositors will be borne by banking customers, in other words, the wider public. In such scenario, he said, part of it should be expected to fall on bank customers directly. That's what they say. So we'll see. The deposit insurance fund's balance was $128.2 billion as of to December 31st, according to filings. 89% of SVB's $175 billion in deposits, or about $156 billion, were uninsured. Wicks said there is no way to know yet how much the federal backstop measure will ultimately cost, adding that it would depend in part on how much regulators can recover from selling the bank's assets. It's entirely possible it will cost zero, he said, meaning it's entirely possible the recovery from selling the failed bank's asset will be enough to fully cover the insured and uninsured deposit. Well, that's what I hope. Well, again, this is the whole saga about the greed and recklessness of the CEO making money, getting big bonuses, and now we have to bail them out. Let me know how you feel about the whole thing. The Silicon Valley Bank is the latest that falls on the floor and now waiting to be bailed out by the taxpayers. I don't think it's fair. I don't think it's right. They should find their way out of it. They messed up. They should fix it. Subscribe and let me know how you feel. Bye.